16 people. Can we go ahead? We are 5 minutes
Yes, we
past.
can. Yes, we can.
Okay, got it.
We can just start now.
Okay, fine, guys. One sec. Let me minimize this. So, I understand that all of you are MBA students. So you might be either you going to be the second year, or you have already graduated from school, or maybe you are in the second year already. So you might have heard the term payroll, benefits, rewards, total rewards, compensation. There are so many words that you might have come across. But what today I'm going to tell you is some basic understanding of what the payroll is, and how a payslip would exactly look like in the industry, and on a higher level how the benefits planning works in an organization. Specifically, I'm going to talk about an IT organization since I'm from an IT background. Um, the theory that we are going to talk about will be applicable to almost all the sectors, irrespective of which industry you're from. So this is sort of the agenda for today. We will start with some basics for payroll, and then we'll slightly we'll for a short period of time talk about the payroll compliance part, and then we'll talk about the payroll taxation as well. So this is a very fundamentals of compensation. Payroll is kind of, suppose we are having a thali meal, and thali is the compensation, and maybe the paratha or the rice is the payroll of it. So compensation is a broad, larger term, of which payroll is kind of an operational aspect of compensation. So we'll come to it. So we'll start with that operational aspect, which is the payroll, and then we'll slowly move to flexi benefit plans, and why and how we do flexi benefit plans in organizations, and how we structure the compensation, etc. And we will also talk about the compensation benchmarking. This is the area where most professionals, compensation and benefits professionals, are working on compensation benchmarking, forecasting, and balancing between what we call as equity, compensation equity, etc., etc. So that's the area most common ben professionals would be working on. And the last item, I'll likely touch upon the benefits and total rewards aspect of it. So most of these jargons you have already had your share of listening to your professors in the classes, or you will be doing that shortly in the second year. What I'm trying to do is to give you a practical aspect of how we do it. So to talk about me, I was an engineer, and then I worked for Oracle for 3 years as an engineer in Bangalore. And then I'm a postgraduate in engineering. And then I switched over to HR just because of my passion for HR. Because I always wanted to be in HR. So it was like after my BTech, I was confused whether to go for MTech or MBA, and then I chose MTech. And one good thing is, I had a fair share of understanding of how engineering and technology works during my engineering days. Then I came to HR. I started as an HR professional in an organization called Profounders, and that is the place where I started to learn about the compensation and the art of developing a payroll components, etc. So when I joined the organization, my first day of HR, the task given to me was to run the payroll for that month. I still remember it was on 22nd of July. So that's almost the time HR professionals run their payroll towards the last week of the month. And I actually had to talk to my peers in the HR community at that point of time, because I had just 2 days to understand how this is. So what I understood from those 2 days is payroll as such is not a very big it's not a rocket science to understand. It's a very simple arithmetic. It's a very simple operational aspect of compensation. So when we talk about compensation, assume that payroll is just a small stone, and the compensation is a big rock. So compensation is all about the organization's goals, their how they see their employees, and how they place themselves in the market, etc., etc. So payroll is just one part of it. So we're going to have a look at how a payslip looks like. So I'm sure you might have seen a similar version of Payslip in your MBA textbooks. So I'll just quickly take you through what are the major components in a Payslip. So as you can see, look at the white cells. The first cell is the basic pay. I've given around 45,000 rupees per month as a basic pay. And we have an HRA, which is 18,000, and there is a special allowance of 22,000. So, these three are the components of an earnable salary, which I have given in this particular pay slip. And when you sum up these three, that is 45,000, 18,000, and 22,000, what you get is what we call as gross pay. Gross pay is nothing but the sum of all the earnable pays, basic pay, HRA, and special allowance. So this 85,000 is the sum of 45,000, 18,000, and 22,000. So, and on column E, sorry, row E, I have given something called employee PF, and there is something called employee LWF and professional tax and income tax, etc., etc., which we call as employee contributions. Some of these are, no, not some of these, all of these are statutory deductions from the salary. So as you can see on row number D, it is called gross pay. Gross is something really big, okay? And from that big thing, you're deducting something, and that something is the employee contributions, okay? So from the gross pay, you deduct these employee contributions, E, F, G, and H, and what you get is the net pay. So on row J, you can see there is net pay. Net pay is nothing but gross minus the employee contributions, okay? So when we say the salary of an employee, what we actually mean is the gross pay of the employee, okay? So gross pay is a big rock, and we are reducing the PF contribution, LWF contribution, income tax contribution, etc., from that. And what's remaining is the net pay, which is the salary the employee is taking home. So this net pay is also known as the take-home salary or a takeaway salary, those, etc., etc. So net pay is the amount that you actually get in your bank account. Okay, so that's about the net pay. And now, I'm sure that some of these words you might have heard of, but you are not aware of what it is. We'll be talking about that in short while in the upcoming slides. So bear with me for the time being. So on line K and L, you can see employer PF and employer LWF. So what is this? So government of India has certain rules called labor laws, which says that, for every employee working in your organization, you have to deposit this money into this account, this money into that account, etc., etc. So there is an act called PF Act, which says that for every employee, this much amount should be deposited into his PF account. So if you look at the net pay is all about what the employee gets, okay? So apart from the employee gets and employee's contribution, there is something that the employer also contributes, which is known as the employer contributions. So K and L are the employer contributions. So you might have heard of this term called CTC, which is the cost to company. The cost to company is nothing but the gross pay plus the employer contributions. Got it? So gross pay is a very big rock, okay, which also consists of the employee contributions. Gross pay consists of the employee contributions. So we have talked about only the gross pay plus the employer contributions. These two together are known as the CTC of the employee. Got it? So we will be sharing this video with you once the call is over. Biju from Best of HR will be uploading the video, and we'll be sharing the links with you, so you can go through this basic arithmetics once you have it. So I'm not spending.
Guys, if you have any doubt, you can ask. No issues during the session.
Guys, let me tell you, it's really weird that I'm just looking at the slides and speaking as if somebody is sitting in front of me. So if you can make some noise, that would be really good. Any questions? Either you understand everything or you didn't understand anything at all.
I think they have understood everything.
Okay,
Everything.
this is very basic arithmetics, and I shouldn't be underestimating the MBA students, so I'm sure they got it. Yeah. Let's proceed to the next slide, where I'll be talking about what the different components are, because this is very important when you're a compensation and benefits professional. You should understand these terms, because you will be talking to the management as well as the your candidates, your aspirants, etc., based on these things. So it's very important that you understand how we calculate these components in the industry. So I'm particularly talking about the IT industry, and I'm sure other industries like FMCG and manufacturing, everybody has a similar structure. So let me tell you what a basic pay is. Basic pay is nothing but a portion of your big rock, the gross salary. A portion of the gross salary is known as the basic pay. So basic pay actually is in place for the reason, if you look at government, let me take an example of an IAS officer. So an IAS officer, when he or she is posted for the first time, he or she will be an assistant collector. Okay, so assistant collector has a grade, a particular grade, and assistant collector grows to maybe a joint secretary, and then becomes a collector, and then becomes the head of department, etc. So what we see is a progression of their roles. Okay, so in between these particular roles, for example, so somebody who has an experience of 4 to 7 years. Okay, 4 to 7 years may have the same basic pay. What trying to make you understand is basic pay changes when there is a significant change in someone's roles or experience. Okay, so in the case of government organizations, they take into account experience much, but in the case of the new age organizations like IT, they don't really take into account your experience. What they take into account is your performance. So basic pay changes when there is a difference in roles. A senior manager will have a larger, or should have a larger, by theory, should have a larger basic pay than a junior manager. That's how it is. Okay. So basic pay is introduced to give a perspective of how big or small somebody is in the ladder of a hierarchy. So basic pay is usually 33%, between 33% and 50% of your gross pay. That's how the companies do until now, because there is one new act which was enacted by Parliament last year, which is known as Code on Wages. I'm sure in whichever role of HR you are in, you will be hearing this term in the next a couple of months onwards. So when you are graduating and you are joining an organization, and I'm sure you'll hear about this act. So Code on Wages talks about the compensation. Wages means compensation, how an employee should be compensated, on what interval somebody should be compensated, etc., etc. So Cotton Wages says that basic pay and DA. I'll talk about DA later. Ideally, okay. So this is not exactly how it is written in the act. This is an interpretation of the act. So it is suggested that you keep the basic pay as 50% of the gross. Okay, I'm not going to the larger details of why it is 50%, but this is the interpretation of the act, and this is the suggested method. So as of now, it is between 33% and 50%. You can keep it like the way you want, but what is recommended from now onwards is to keep at 50% of the gross pay. And now there is another term called dearness allowance, otherwise known as DA. So if there are Malayalis in this crowd, they might have heard the term Kshama Bhata. So Kshama Bhata is basically the dearness allowance is basically the amount given to the employees to meet the market needs. For example, inflation happens, and the prices of the commodities go high. So at that point of time, the government will tell the organization that in this particular quarter, in this particular month, this is the DA you have to provide to your employees. So this is how it has been. So there will be a basic pay, and additionally there will be a DA. So there is a concept called minimum wages. Minimum wages Act says that a particular for a particular role, a particular employee should get at least this amount. Okay, at least this amount. That's what the minimum wages in essence is. So, but in the new generation organizations of the IT organization, FMCGs, etc., etc., they don't actually give a DA component. What they give is they give a huge basic pay, which itself is over and above the minimum wages. Okay, so you can, if you are giving 10,000 rupees as basic pay, you can either give that 10,000 fully as basic pay or 8,000 basic pay and 2,000 DA. So DA component is not really, these days used by most of the organizations. What they do is they combine it and give it as basic pay. That is okay by the labor laws. So you can simply give that amount to the employee, and it's fully taxable. That's the most important thing we should note. The second one is the HRA. HRA is nothing but the house rent allowance. If the employee has to rent a house in the city of the organization, and this is the salary component where the company will be providing accommodation for. So if you look at the bank employees, what the banks are doing is, they actually don't give the HRA, but the bank will rent out a house and give that house to the employees. In that case, they will not have HRA. So HRA is basically the house rent allowance given by the organization to find a house and stay in that. So what is the amount of HRA? Amount of HRA is usually 40% of the basic pay. Um, and in the metro cities, it is 50% of the basic pay. So India has 4 metro cities. Kochi is in one of them, and unfortunately, Bangalore is also not one of them. Delhi, Calcutta, and Bombay and Chennai are the metro cities. In those cities, organizations can pay up to 50% of their basic pay as HRA. In other cities, anywhere in India, it is 40% of the basic pay. The reason being, this is the reason, basic pay, as I said, it's fully taxable, but in the case of HRA, it can be non-taxable because you don't have to pay income tax on that, provided there are 3 conditions given. We have to pay tax. There are 3 conditions given. So of these 3 conditions, whichever is minimum on that amount, you don't have to pay tax. So the first condition is 40% or 50% of basic pay, whether it is metro or non-metro. The second one is the actual rent paid by you minus 10% of your basic pay. That's a calculation. Actual rent, suppose 10,000 is your basic pay and you pay a rent of 5,000. This calculation leads you to 5,000 minus 10% of 10,000. That's 1,000. So it is 4,000. And the HRA provided on your payslip. The organization actually has shown some amount as HRA. So of the 3, whichever is lower, on that amount you will get tax exemption, and that's the significance of HRA. And the third component is special allowance. Special allowance is nothing but you had basic pay and you have HRA. So to meet the total salary, the total gross pay, there is some amount left. That amount goes to special allowance. So broadly, this salary has 3 parts. Let's forget about the compliance parts and contributions, etc. So basic pay, HRA, and whatever is left goes to special allowance. And one sad part is that special allowance is fully taxable. Okay, so we are going to have a deeper look at what can be done on that fully taxable component. That's where the HR comes to play. So far it's basic arithmetics, and now we are going to look at how this fully taxable special allowance can be tricked into. I wouldn't say tricked into. There are some provisions in the law, Income Tax Law Act, which allows the employers to design the pay slip such that those components becomes tax free. Okay, DNS allowance I already talked about. So that is what we called Flexi benefit plan. Okay, I'll be talking about that in the next slide. Before going to Flexi benefit plan, let me just give you an overview of the what the employee deductions are. I'll stop after one more slide, and then I'll wait for questions. I'm going a bit faster here because the entire content might take 1 hour, and I don't want to spend too much amount of time on the basic stuff. So let's have a look at what are the employee deductions. So as I said, gross salary, which has employee deductions. Okay, so from gross salary, you deduct employee deductions, you get net pay. So what are these employee deductions that we have been talking about? Let's have a look at. So the first one is the E. E stands for employee, okay, and ER stands for employer. So we are going to talk about EE, which is employee deductions. The first one is the EPF. EPF stands for Employee Provident Fund. What is Provident Fund? It's a social security measure which is enacted by the government of India long back. So, a certain portion of your salary goes to a particular fund called EPF, and the government has an organization called EPFO, which is Employee Provident Fund Organization. It manages this fund. So, what does EPFO do? EPFO will take all the fund coming from the employers and put it into the government bonds, and some of them will go to the stocks, stock market, and those things will happen, and they earn some interest on that, and a part of that interest is given back to the employee. So it's kind of a scheme which throughout your career until you retire, you keep contributing to EPF, and at the end of your career, you'll get a large sum of amount. And EPS has a contribution term called EPS, which is Employee Pension Scheme, which I'm not getting into the details of, because you can, maybe if you're interested, you can Google and find out. So EPF is basically 12% of the wages. So when I talk about wages, as of now, the wages is the total your total salary minus HRA. So EPF is not applicable on the HRA component. So basic plus special allowance, take the 12% of that. That is a contribution that goes to the PF account. And there is one more catch. Suppose your basic pay is 50,000, and you take 12% of that. How much is that? 6,000, right? So 12% of 50,000 is 6,000. So do you really need to put that 6,000 into the PF account? No. And the government says you have to deposit up to 1,800. So if you choose to deposit over and above, that's okay. Government accepts it, and you'll get interest on those excess amount as well. So up to 1,800, it is mandatory. Okay. So if your basic pay is say 5,000, just take the 12% of it. It's less than 1,800, right? So in that case, put that amount. You don't have to put 1,800 in full. Take the 12 percentage. If it is greater than 1,800, you can either choose to deposit 1,800, or you can put the entire amount. That's how it is. Okay. And there is one more beauty of it. When the employee contributes this much amount, employer also contributes that amount to your fund. So actually, if you're contributing X, you are actually getting 2x, because the employer is also contributing the same amount to your EPF fund. Okay, and there is one more thing you should understand. EPF is a fund which is mandatory for all the employees, but there is one situation where you can ask not to have EPF. That's when you take up the first job of your life. Okay, when you're taking up the first job of your life, you have an option to choose out of EPF. But in the first job, if you choose EPF, you'll have to contribute to EPF till you retire, whenever you are getting into a job, a private job. That's mandatory. So there is only one opportunity for everybody to opt out of EPF, is when you land in your first job. On the day of joining, you have to tell your HR that you don't want EPF, then that's fine. Okay. So, but I strongly suggest that this is a very good investment method, and I strongly urge that you shouldn't opt out of EPF. It's a very good investment method. So the second point is the EEPT, Employee Professional Tax, which the company will be remitting at the local what you call panchayat, corporation, municipality, where your organization is. So if you're from Infopark, you have to pay this tax to Trikakara municipality because that's where Infopark is. So go to the local administration body, and that's where the professional tax is to be filed. And it is in Kerala. It varies in different states. So in Kerala, it's up to 208 rupees per month, depending on your salary, and it can be as low as 167 rupees or something. So it's kind of a band. If your salary is between this and this, you have to pay this much, and this is paid half yearly. So 208 into 6 is what you're going to contribute. So these are the deductions made from your gross pay. The third one is the Employee Labor Welfare Fund, LWF. If you have you might have seen take any labor group, teachers, okay, uh, or construction workers, anybody, there'll be a welfare fund for those employees. So LWF in Kerala, it's for the shops and commercial establishment, LWF that I'm talking about. If you're a shop means IT company is also a shop or an establishment. So in those cases, an employee has to contribute rupees 20 rupees towards the LWF fund, and employer will also contribute 20 rupees to the fund. And this fund becomes a corpus, and once 5 years is over or 3 years is over, there are certain benefits that you will get. For example, for your marriage, you'll get certain amount. When somebody dies who is an LWF member, there is a certain amount for the funeral expenses. And there are a lot of benefits that LWF brings forward, but the contribution is very small, rupees 20 per month. And the last one is the employee ESI. So ESI is nothing but employee state insurance. It's like a medical insurance. If an employee is an ESI member, that employee's family is covered. The dependent family is also covered under medical insurance. So if they go to the ESI hospital, they get the surgeries free, they get the medicine free, everything is free. Even the super specialty surgery is free after a certain period. And one good thing is that the employee contribution of ESI is just 0.75% of the gross salary, but employer also contributes, which is 3.25%. So employer's contribution is the highest one. So for employees, it's a very small contribution, but they are getting a very big medical coverage. So that's what the ESI is. And one catch is there, a member can be an ESI member, an employee can be an ESI member only if their salary is less than 21,000 per month. If your salary is about 21,000 per month, you cannot be the ESI member. So that's how it is. If somebody's salary is say 15,000, and they worked in an organization for say 6 months, and they contributed to ESI, and if they go for maternity leave, for example, so 6 months of maternity leave. In the case of normal employees, it's very important. Please understand. In the case of non-ESI employees, because non-ESI means those who do not have ESI, the organization will have to pay for these benefits, sick benefit, or the maternity benefit, 6 months of salary, etc., will have to be given by the organization. But if somebody is an ESI member and that member goes out sick or goes out on maternity, that salary for those periods, 6 months, whatever it is given by the ESI corporation, not by the employer. So that way, employer also benefits from ESI scheme. So I'll just quickly go from here. So these are the employer contributions we already talked about. EPF, LWF, and ESI, employer also contributes. There is no employer contribution for professional tax. There is one, but not from your payroll. So these are the components. And CTC is nothing but gross plus the employer contributions. Gross already has employee contributions. So don't add up it once again. Gross plus employer is the CTC. CTC is just an accounting term. There is no legal CTC term defined in any of the acts and laws in India. So CTC is just a term that we cooked up. I mean, the organizations cooked up. So you will not find that in any books. So this is the income tax slab. I'm just just leaving it as such because it will take a lot of time. And And now, before I proceed, I'll stop for questions. But before that, who calculates all these? All these, who calculates basic pay, who calculates all the 40%, 50%, and what is the tax to be deducted, and what will be the tax next year, sorry, next month. So all these calculations used to be manual until very recently. But now there are so many tools which are known as the SaaS tools, software as a service tools, which actually provides a facility for the HRs to just key in your CTC or key in the gross salary, and it will calculate everything, and it will run the payroll. It will take the leave data, it will take the attendance data, everything together, and will give you an amount that should be paid to this employee. So there is almost zero work these days for the HRs as far as the payroll is concerned because of this automation. And that is why payroll jobs are of less demand these days, because payroll is something that can be automated. So anything that can be automated goes away very fast from industry. So if you ask me, going forward, payroll jobs will not be there as much as it were yesterday. So how about the compensation and benefits then? That's why I said compensation and benefits is a very big rock, and payroll is just an operational part of it, which can be automated. But the compensation and benefits cannot be fully automated because it has a human element, which cannot be easily replaced by machines. I'm not saying that it's not replaceable. It may be, but not in the very near future. So that's what we are coming to. But before that, I'll stop for questions. You have to ask me something. Anybody? We have 21 participants and no questions.
Hi, I'm Swati the other side. So I have a question for you. I'm gonna ask about you talked about the salary, finding an apartment, deductions and compensation. But I have a question regarding the income tax. So actually, what is the minimum rate for the income tax to deduct the income tax?
Uh, Biju, I actually didn't hear the question properly. If you heard it, could you please repeat it for me?
No, no. Actually, could you please repeat the question? Hello, you there?
Hello.
Yeah, please tell me.
Yeah, so my question is like, what is the minimum wage for the income tax deduction?
Okay, I'll come to that. So, as you can see on the screen, it is rupees 5 lakhs.
Oh, 5 lakhs. But I think probably I heard in some places that in monthly salary they are deducting income taxes
I'll
coming
tell you.
from.
I'll tell you how that looks like. So when the financial year starts, that's the month of April. When the financial year starts, the payroll team will calculate the prorated salary for that year. Okay, if somebody has a monthly salary of say 1 lakh rupee, and in the April that's their salary, somebody's salary. So what the payroll team will do is they will extrapolate this. They will say that for 1 month it's 1 lakh. So for the next 12 months, that's for the entire financial year, what is the total salary? It is 12 lakhs. Okay, and that's how they will calculate the tax. They'll be calculating tax on this 12 lakh because 12 lakh comes in the income taxable bracket. And suppose, for simplicity, I'm saying that of the 12 lakhs, the total tax is 1 lakh. Suppose it's not 1 lakh. Suppose it is 1 lakh is the total tax to be paid for the entire year, for the entire 12 lakhs. What the company will do is they will divide this tax, 1 lakh tax, into 12 portions. Okay, and 1 lakh by 12, and that amount will be deducted every month, so that your income tax is not deducted at once. What the company doing is they will prorate the salary, they will extrapolate the salary, and on that salary they will calculate the tax, and that tax will be split into 12 months, and every month they will be calculating the tax accordingly. And in between, if your salary changes, they will recalculate the total tax, and they will know what is the tax already deducted and what is the remaining, and they will divide that into the equal months thereafter. That's how it is.
All right. Thank you so much.
Did I answer your question? Yeah, I hope yes. So, guys, I have maybe how many slides do I have? 13, 21, 20. Okay, I have only 20 slides. We are halfway through, but this is something I wanted you to understand because this is very important. Most organizations do not take the pain of implementing this, and that's why their employees end up paying a lot of tax. So as I said, salary consists of basic pay, HRI, and the special allowance, right? So the basic pay is taxable. HRI may or may not be taxable. If you pay the rental bills, it will not be taxable. So basic pay is definitely taxable. And the special allowance is also taxable. We are looking at how we can restructure this special allowance so that it is not taxable. Okay, income taxable. So we may not be able to do it completely, but a portion of the special allowance, how can we make it non-taxable? And Flexi Benefit Plan, otherwise known as FBP, is the way through it. Okay, so what we are doing is, suppose there are special allowances 40,000 rupees and entire 40,000 is taxable. What we are doing is we are splitting this 40,000 and putting into different buckets. Okay, and that those buckets are what you're seeing on the screen, and put it into different buckets. And at the end of the year, you say that I gave this much money for this bucket. Give me the bills. Okay, give me the bills. Suppose I'm giving you of the 40,000, I'm saying of the 40,000, 2,000 rupees I'm giving you for internet. Go find the internet, enjoy. Okay, so balance is what? 38,000 as a special allowance and 2,000 in the internet. Okay, so I'll keep giving you 2,000 every month from this 40,000, so that special allowance is on 38,000 only. So we'll be taxing only this 38,000. This 2,000 is not taxed. At the end of the financial year, the company will ask, I've been giving you 2,000 rupees every month for the last 12 months. Where is the bill for internet? Okay, and if that guy provides the bills, government says you can give this particular benefit to this employee, and if that person gives you bill, you don't have to tax that employee. Okay, so you have to tax only this 38,000, not the original 40,000. And that is why this internet is a allowed or allowable flexi benefit plan. Okay, so there are some directions from the government, what kind of flexi benefit plans that we can have in the organizations. So you cannot actually give them 50,000 rupees and go watch movie. That's not possible. There are certain heads into which you can actually split, and we're going to see the prominent ones. The first one is the meal coupons. So of the 40,000, you can actually give a certain amount every month for meals. Okay, so you cannot actually give that amount as cash, but instead you can give them cards. HDFC has a food card. It's in the other room maybe. There is a food card. Food card by most banks provide food cards. It's a prepaid card, debit card kind of a thing. And Sodexo is a very famous company. And these days we have Zeta, ZETA. Zeta is a very famous food card company. So they will give you a card, and every month the organization will be recharging this card, and you can use this in restaurants, grocery shops, and wherever whatever is related to food, you can use it. And what is the advantage? The employee will definitely use a particular amount on food expenses every month. If it is given as cash in special allowance, that person will have to pay tax. But if we get it as this card, we don't have to pay tax on that component. So from say 2,000 is given every month, from 38,000, from 40,000 he has to pay on tax only on 38,000 because 2,000 already went to this food card. So that's the first item. There are some rules like in a day it can be up to 135 rupees, and if you have 25 working day, maximum allowable amount on this card is 135 into 50. So companies do what they do is they recharge it at the start of every month together, 2,500, 2,000, 2,500 rupees. Okay. The second one is a gift coupon. It's an annual gift coupon. In a year, it can be up to 5,000 rupees. So company believes every year we should allow employees to buy whatever they want, and we are providing them some gift coupon from Paytm, say, or Amazon, whatever it is, and that amount is non-taxable. So I'm coming back to my original number. 40,000 is your the special allowance. 40,000 is entirely taxable. But if we take 5,000 rupees from that, but this is annual, okay? So we cannot take away 5,000 from 40,000. 5,000 by 12, that's the per month contribution. Take that from 40,000. So remaining amount is the only taxable amount. So this is another aspect of it. So you can have all of this together. All of the you can have meal coupon, gift coupon, vehicle, etc., together, so that you can save a lot of money from being taxed. Okay, and vehicle maintenance reimbursement. If you have a vehicle of I forgot the CC. Below particular CC, if you have a vehicle in your name, there is a provision that you can actually give 1,800 rupees for that. And if it is above that CC, it is 2,400 per month. This also includes the fuel reimbursements and internet and telephone. There is no limit in case of reimbursement. Traditionally, companies give 2,000 to 2,500 every month. And books and periodicals, you can buy your dailies, your weekly magazines, monthly magazines, whatever it is, e-magazines, e-books, purchases from Amazon, etc., etc. If you have bills, this is also non-taxable. And what happens is, at the start of the financial year, the company will ask you, hey, Are Baba, I'm going to give basic pay, HRA, and special allowance. And this special allowance is fully taxable. Are you okay with it? Then the employee will say, sir, don't give me special allowance as it is. Split the special allowance into these heads, these flexi benefit plans, and that's how you should give it to me. So that at the end of the year, I'll provide you bills, and so that you can give me, so that I can save some tax. And that is why the earlier pay slip has changed like this. If you have a look at it, see, basic pay is 45,000 intact, HRA is 18,000 intact. Now we have some components, vehicle and fuel, somebody has chosen 2,400 per month, internet is 2,500, books and periodicals is 2,500, and special allowance is 14,600 only. It was how much is it? It was 20,000 before, and the gross pay does not change. It was 85,000 before as well. So what changed? Special allowance changed, and somebody has to pay tax only on basic pay and special allowance here. Earlier, the special allowance was higher, so the income tax was also higher. See, if you see, look at row K, the income tax has come down. It was 3,000 something earlier. Okay, so it's a random number just for illustration, but income tax will come down just because the indirect special allowance is not taxable. So this is the way how you design your pay slip, how you design your pay structure. That's where the HR comes in. Okay, and the headache for HR is, at the end of the financial year, they will have to collect all the bills. Okay, one more thing, for the meal coupon and gift coupon, there is no bill required, because the company loads it. The company loads the gift coupon, company loads the meal coupon, so there is no bill required. For other things, you have to submit bills. Okay, so at the end of the financial year, in the month of February or so, the company will have to collect all the bills, and they will have to see if there are genuine bills, and then genuine, you don't have to tax them. If the bills are not submitted or the bills are fake, then company will have to recalculate the income tax, because these components all has to go back to special allowance if the bills are not submitted. So at the end, the recalculation at the end of the financial year, this recalculation happens, and that's a headache for the employer or the HR. That's why many companies don't give this flexi benefit plan to their employees, and because of this headache. But as long as there is automation and things like that in place, these days employees don't have to worry about this. Either they outsource, or they have a system where employees can simply upload the bills, and at the end they'll have to just skim through the bills and approve. That's how it is. So since the automation is there, these things have been very drastically easier than it was before. So I just wanted to put lights on that. And there are two more FBB components. The first one, the next one is leave travel allowance. So if you have if you know anybody from the government service, you might have heard of LTC, leave travel concession or something. Okay, what they get is, every 4 year, that 4 year is known as the LTA block. Okay, every 4 year they'll get a certain amount of money twice, every 4 years twice, and they can travel anywhere in India, and they have to submit the bills of their major transportation. Car bills are not allowed, food bills are not allowed, but you can submit your bill, your parents or siblings or dependents, you take with you, and you can submit their flight tickets, ship tickets, bus ticket, and train tickets. Accommodation and food are not allowed. These tickets are considered tax free. Okay, tax free. So what companies are doing is they split the special allowance, a portion of special allowance, they give it as LTA every month, and at the end of the year, they ask, do you have any LTA to be considered for this year? And do you have any bills for the LTA? If they provide bills, that amount is non-taxable again, always. So there is a catch. There are some of the HRs are of opinion that it should not be given every month as such, and should be given only when the employer requests, etc., etc. This is debatable, but then most of the companies provide LTA on a monthly basis as non-taxable component. Okay, some pay it as a taxable component as well. So that depends on the HRs. If they give it as taxable component, when they provide bills, they will have to reconvert it to non-taxable. That's how it works. So it's a basic it's common knowledge that it's a very widely adopted flexi benefit component, because because of the nature of the workforce that we are seeing, Gen Z, those young members, they would like to travel in India and abroad, but unfortunately travel abroad is not considered for LTA, but travel within India is admissible under LTA, so that's not taxable. So if you are joining a company, ask for LTA in your salary payslip, because that'll be worth. The voluntary provident fund is nothing but somebody is unhappy with the amount they are giving to their provident fund, they can, over and above that, they can voluntarily give some more amount to the provident fund. That's how it is. So it's a component, because that amount is non-taxable. Whatever you put into your fund is non-taxable. Up to a certain limit, of course, but then it is non-taxable. If somebody wants to, put some money extra to the PF fund, it's the voluntary fund. And how the income tax calculation, etc., works, there is something called investment declaration at the start of the financial year, and at the end there is something called IPSF, etc., which I'm not going to talk about. It's more of operational stuff. So we're coming to the end of the second topic. We have 4 topics. This is the end of second topic, compensation structuring. So as I said, compensation is not always about money. Okay, so compensation is about the money that you get in hand, which may or may not have the flexibility plans, etc. So there's the actual amount of money that you get. Besides money, there are certain components that also comes along with it in larger companies mostly. For example, if you're joining Google, you'll be given a certain stock of Google. They'll say that we will give you stock for this much amount, or they will tell you, I will give you these many stocks of Google. And that will not come to you naturally. I mean, that will not come to you at once. They'll say that over the period of 4 years, these many stocks of Google will be allotted to you. So that's also part of your compensation. So big companies do this. They don't give a very big salary together. They give a portion of the total cost of the company as liquid cash, and then another portion as the stocks. And what is employee stock options is a very common term. If you're getting into an organization, there is a high chance that you might be cheated by this word, because employee stock options is not stock. Okay, employee stock options are for those companies which are not listed. Okay, private companies or public company, whatever it is, it's not listed. Stocks are for listed companies. Okay, Google, Amazon, Tata, TCS, Infosys, etc., because they are listed companies. They are on the NSE or BSE. But stock options comes for companies which are not listed. Small companies, but not many people have invested in. For example, Paytm, it's not listed. You cannot buy stocks of those companies. So what this means is, when you join a company, the company will say that your in-hand salary is 10 lakhs, but we are giving you stock option for 20 lakhs. So your total compensation is 30 lakhs. So it's a way of inflating your compensation, but actually don't fall for it. Definitely, stock options is a very valid compensation factor, but don't let your employer inflate it. Okay, stock option is when it comes into play when that's how it is. When you join, suppose the valuation of a company is certain amount, and they have these many options, these many stock options, and so when you divide these, you'll get the value of one stock. Okay, it has not actually gone to NSE or BSE, but this is the valuation of the company. One stock costs $1, say, suppose. So what the company is giving you through ESOP is they are giving you 1,000 units. Okay, so what is the cost? 1,000 into $1 is $1,000. You don't have to pay for this stock. You'll get it. 1,000 units, you will get it. You don't have to pay now. But after 4 years or after 5 years, when you're exiting from the organization, or when you resign or you're terminated, you have an option to buy the stock of this company. That is these 1,000 units, which you have not actually paid. When you separate from the company, you can actually buy this at what price? The price when you joined, $1. Okay, so when you exit, you can buy this at $1 at $1,000 in total. You can have the share of this company. You can convert this to the share, and you can keep it. It's not yet on NSE and BSE. You may not be able to trade it, but then you will have an option. Otherwise, if you are not an employee, there is no provision at all to buy stock unless and until you are an investor. You cannot actually get the stock of the unlisted company. So this is the stock option to buy the stock. That's not actually stock. You have to pay actually if you have to convert it to stock. And when the company actually goes public, you can actually trade this. So it's a long-term thing. If somebody is given large amount of ESOPs, and that's actually a mechanism for the employers to keep the employees within the company, because this valuation will grow anyway, but the company is not going public, and people will be actually not willing to leave the company, because when they look at I joined for $1, and now after 5 years it's almost $10 now. So $10 into 1,000 is $10,000 worth. So if I'm going out now, I'll have to buy this. Should I actually go, or should I stay for some more time, see if the company goes public or somebody acquires the company so that I can encash some amount? So this is kind of a retaining technique as well. So ESOPs are given by non-listed private companies. Okay, so this is part 3, but yeah, I'll quickly go. So this is the compensation strategy. When you're designing compensation, it's not about payroll alone. It's not about the salary that you get on paper. It's about various factors. So these are the intentions. Attracting talents, because for example, Visa, when they established their first company, I remember it was in Bangalore, wherever it is. They gave huge compensation to the engineers, because they're new in the market. They wanted to attract the top talent in the market. So when you have to attract top talent, you might have to give top-notch compensation. So attraction of talent is one of the reasons why the compensation is how the compensation is defined. Motivate and retain staff. Of course, will you stay in a company which doesn't give you any performance hikes, or salary is not revised for 10 years? No. So it's kind of money is always money. Non-monetary rewards are also motivational stuff for the staff to retain. And reward valued behavior. Somebody shows expresses great core values of the company, expresses innovation, etc., etc. So that's rewards and compensation is a way of actually rewarding them. Administrative efficiencies, the legal compliance part. Ensure equity. Equity is something, equity is everybody is treated fairly, everybody is compensated fairly, etc., etc. That's why you should have a compensation strategy. We'll be slightly touching upon that in the slides to come. So executive compensation is totally different from how you pay the lower grade members. So executive compensation comes into play in case of the directors and those VPs, SVPs, those kind of members, the compensation planning for those members are totally different regime. So if you, I'm not going to read all of them. Got it from one of the slides from a recent session by Deepa Koka. So so this is how it is. Companies normally provide cars, estate planning, first class air travel, company plane, Elon Musk might have, home computers, chauffeur service, children's education, spouse travel, company paid parking, vacation cabins, etc., etc. There are so many benefits that the executive, people in the larger organizations get. So it's compensation is not always about money, gentlemen. In most cases, compensation in means and kinds will be larger than what they get in hand. So in one of the companies for 5 years back, the CHRO had a compensation of 36 crores in a year in India, in Bangalore. And he was one of the highest paid members of the organization, 36 crores in a year. And of this 36 crores, the actual money in hand was less than 12 crores. So everything else, almost 24 crores were from, company cars. They provide big bungalows. They give sponsored trips all around the world for family, etc., etc. Mobile phones, laptops, so many things. So compensation is not about money. So I'll okay. I'm on slide number 14. We have just 6 more slides. So this is the okay. So I'll just stop here for questions, if any.
Hi, sir.
Call me Arun.
So my question is, I'm a first year student, so these concepts are new to me. So my question is, flexi benefit plans can be, it can be chosen by company. They can either choose it or not. But what is it like from the employee perspective? Is it that they have the right to ask the HR that these kinds of plans need to be adopted, or is it like purely on the side of the company whether to choose it or not?
Unfortunately, it's for the organization to choose. If the organization doesn't provide it, employees can actually request, have a collaborative, meeting and represent themselves, etc., etc. But in the end, it is the organization's decision.
Okay, thank you.
Thank you.
Yeah, actually, Arun, there is a question in the chat asked by Shruti.
By Shruti.
Yeah, she's asking if
hi.
the person.
Yeah, all right, carry on. Yeah, carry on. It's fine.
Yeah, please. I actually didn't see the chat. That's why. Yeah, go ahead.
Yeah. So, Arun, I have a question regarding the PF, PF division. As in, like, we are the employee is also getting, and the employee is also paying, as well as the employer is also contributing to the PF. And how does it, how does the employer contribution split up? I think it goes to the pension contribution as well as the something else, right? Could you please clear it? Like, how is employer contribution is getting split up?
Got it. I'll tell you how. The employer contribution does not split up. Biju, please correct me if I'm wrong, because Biju is way better than me when it comes to compliance.
That's right.
Yeah. So employer contribution does not get split up. Employee contribution gets split up. So, for example, if it is 1,800 rupees as the EEPF, employee PF, of this 1,800, 1,250 goes to EPS, employee pension scheme, and remaining goes to the Provident Fund. But
Yes,
employer's contribution, 1,800, entirely goes to the PF, not to the EPS.
No. It's like, sorry, there is a mistake in that. Employee contribution of 1,800 rupees completely going to the employee's account. And in the employer contribution side, there is two split ups. One is that is 8.33% of the wages which we are paying will be going to employee pension scheme, and remaining 3.67% will go to the employer account.
Got it. So I got perplexed. Yeah, that's how it is.
Yeah.
So 8.33% is the, but there is a limit on that, which is up to 1,250. Correct?
That's right.
That's how it is.
Alright. So 1,250 will go to the PM, right? No, I'm confused.
1250 will go to the EPS,
Employer
Okay.
pension.
Okay.
pension fund.
Okay. Okay. All right. All right. Thank you.
All
Yeah.
right, all right, and thank you,
Arun,
Viju.
there is a
I
question.
get
Yeah,
perplexed
yeah,
with all
that's
these
okay.
kind of questions.
And Arun, there is a question in the chat that is asked by Shruti. If the person is not very good in numbers, will you suggest C&B as good option for specialization?
Okay, I myself am not an expert in CNB, but it needs basic arithmetics to be fair, and it needs some basic statistics as well. So you know. Basic statistics is definitely a must-have. Basic statistics like median, percentile, and all those things is a must-have. But data science skills or larger, higher order mathematical skills are nice to have from what I know. Because there are a lot of tools available. You don't really have to actually mathematically calculate stuff. But statistics is something we cannot live without in a CNB profession.
Yeah,
But that's very basic stuff, not higher order ones. We'll come to that in a few slides now.
thank you.
Okay, got it. Since you asked the question, I would like to recommend one course. I mean, there are so many MOOC courses, right? MOOC, massive open online courses. There are so many HR courses which are provided for free. For example, on there is a website called Great Great Learning. Great Learning is a portal which has a lot of those video courses on technology, etc. So there is an HR course which is free, um, that talks about data science and how HR can make use of data science, etc., etc. So maybe as a CNB professional, if you would like to be, I strongly suggest that you just go to that website, Great Learning website, and have a look at those courses, so that you will get an idea of what order of mathematical aptitude is required for these kind of professions. And another point is, there are some courses on Coursera as well. Coursera, you might have heard of. There's a MOOC website. There are a lot of HR courses there as well. If you go to the analytics, HR analytics portion, that's something you might need a higher order of mathematical skills. But CNB, I wouldn't say that something beyond your degree level mathematics is required. I know that you guys are already cracked the MBA, CAT or MAT or SAT, those kind of exams. That would be sufficient, nothing more than that. And one course, if you would like to, take up the CNB career, I can prescribe is. You might have heard of the name AON Hewitt. AON is a very, it's an MNC with over 70 years of, sorry, 70 presence in more than 70 countries. So it's a large consulting firm. So they conduct these courses in India, HR courses in India. It's known as AON Hewitt. I mean, they combine with Hewitt. The course name is AHLC. That's the university's name. That's how they call it. Aon Hewitt Learning Center. So they conduct a course on rewards. That is compensation. It's known as CRP, certified. Sorry, yeah, certified rewards professional, CRP. The course costs around 60,000 rupees, but it is supposed to be one of the best available courses on CRP in India. It's a face-to-face course. They have a online course as well, but I strongly suggest that you go for a face-to-face course. They conduct it thrice or four times a year in different cities. So if you can go to the website and see, because I was particularly interested in the course. After looking at the syllabus, I might be joining in a couple of months, maybe in July. But that's a recommended course. So let's come back to this. I'll just quickly finish it off. I was hoping to finish it off before 6:15, but unfortunately, I'm talkative when it comes to these things. So compensation benchmarking. So guys, have you seen companies actually asking employees what is your current salary and how much do you expect? And what do you think? I mean, is it a fair thing to ask? In US, in many states, asking the previous history, I mean, asking the historical compensation is a punishable offense. The company should not ask the employees what their current or previous salary is, because the philosophy is that employers should not give a salary to somebody based on their previous salary. That should not be the basis for providing salaries. Employers should understand, so this particular role requires this much hard work, I mean this much work, this much those contributions, this much behavioral aptitude, etc., etc., and this role has a worth of this many dollars or this many rupees. So this is should be the basis of selling a job. Okay. So the reason why most of the companies ask you how much do you want, or what is your current salary, we will give 30% on top of it. Who the companies are to ask you a private data of yours? The salary is your salary, your compensation is a private data. Some companies go to the extent. I must admit that there are companies which I've seen doing this as well. But 90% of the companies in India do this. They ask for the financial statements as well. So it's philosophically wrong. In our organization, we are also moving towards having this eradicated. The idea is, if the employers, the companies, if they are not aware of how much a job is worth, who will in the world know? So for the employers to understand how much a job is worth, there are different factors affecting it, right? The first one is, what level of experience and expertise, as well as the behavioral competence. When I say behavioral competencies, it's like, for some jobs, innovation might be key. For some jobs, integrity might be key. For some jobs, mathematical aptitude might be a key, etc., etc. These are the behavioral aptitudes kind of things. Mathematical aptitude might not be exactly behavioral aptitude, but these leadership skills, those kind of things. When an employer has a new job opening, they assess a job based on different factors. Whether this job has a supervisory nature or managerial nature, how many people this person will be reporting to, what will be the budget, excuse me, this person will be handling. So now there are so many factors, and there are some technical aspects of the job as well. So putting it together, the company will come to a conclusion that this is this looks like a salary range for this particular role. And this is known as, I mean, I have very simplified this, but this process is known as job analysis and job evaluation. Exactly, job evaluation. There are so many methods you might have heard of, Hayes method, etc., etc., for evaluating jobs. So what it is at the end of the evaluation, the company gets a sense of the seniority required, etc., etc., the skills required, and the compensation that they actually can pay for this particular role. But that's not enough. They have to actually look at external factors also. These are internal factors. And there are another internal factor called parity also. For example, this role requires 5 years of experience. Okay, similar rolling we had in that department. We paid this much. So we actually really cannot really go below that, because we have to match this parity. That's kind of an equity within the organization. So these are the internal factors. And then you have to look at the external factors also, which is known as the market trends. Of course, 3 years of software, an entry level Java professional cannot really have 20 lakhs of salary in Kochi, because that's not the market is. But an entry level, a machine learning professional may get a 10 lakh rupees salary. A Java professional might not. I'm not saying they won't. So it depends on the kind of skills. It depends on the market. In Bangalore they may get a higher salary. In Kochi they may not get higher salary, because the availability of jobs is higher in Bangalore, and it can be vice versa also. In Kochi, availability of candidates is less, so companies may overpay and hire. That can also happen. So these are the external factors: availability of people, availability of job, and what other companies are paying. That's very important. That's why we are coming into this compensation benchmarking. So what other companies are paying for this role? So where will these companies get this data? So companies can purchase these data from companies like, like I said, Aon. Aon has this salary data, and Mercer, if you have heard of, Mercer is one of the biggest players in compensation benchmarking. So what companies will do is they'll give them description of a role. So these are the skills required. This is a manager role, or this is an IC, individual contributor role, and this is the year of experience required, and this is the industry, etc., etc. These informations are fed in, and the Mercer or those companies will provide salary is provided by similar companies. So we have to look at the industry. We have to look at the number of people in the organization, because a 200-member organization may not be able to provide the salary provided by a 5,000-member organization. So we have to match our industry as well as the size of the company. So where so many factors, it's a bit complicated process, but then they will get a salary of similar companies. Okay. X company provides this much salary for this company. Y company provides this much salary. Z company provides this much salary. Okay. And this will be a range of salaries. And then the company will decide, okay, should we actually give the topper salary? Okay. Suppose we are entering the market for the first time. We want a fresh talent. Then the company may decide, okay, we will give more salary than what other companies are giving. So will be the 100th percentile in this range. Okay, or some companies may decide whatever is median in the market, 50 percentile. Okay, you know what is percentile is, so I'm not going to explain. Whatever is median, what is median in the market? Let's get them. Let's give that median salary. So then they will adjust. They had a calculation and they will map it to us and see where they're standing. They say, okay, these many members are below the median. I want A players. Why don't I give 74%? Yeah. Let's look at the 75%, because we will get a cream of people. Maybe from this company, in this company, most people are given 75% compensation. So if I give maybe that or about that, I can grab those employees here, because I should not be paying lesser than what similar companies are paying. Or I want to place an employer branding there saying that we are a company that recognizes talent. So these are the considerations, and we reach a compensation benchmarking. This is a very simple explanation. It's not that simple. It involves a lot of data processing and all those things. So this is the entire architecture of it. First, they have to define, look at the quarter one, define jobs, then what is the taxonomy, etc., stock level, pay type, etc., etc. Then come to Q4, benchmark jobs to market, that is they compare with other companies. Come to Q3, analyze competitive data. When they got the salary, then analyze it and decide where we have to pay, and then review the budget and take the final decision. This is how the compensation benchmarking looks like. So this is a this is a report that I ran. If we have 2 minutes at the end, I'll show you how to do it. So I just benchmarked a software engineer salary for Bangalore, who has 3 years of experience, etc., etc. And this is how a salary benchmarking data will look like. So this is very primitive. I took it from Payscale. Okay. So if you go to Payscale, you can also run this, because you get I'm not sure students will have access to, because they ask for corporate email ID. So if you give corporate email ID, you get 2 free reporting every year for free, just to see where your role may be standing at. So this is how it is. Basic pay at 58 at median. If you look at median, it is $621,000 is what is being paid. Okay. And this is the total cash compensation, because as I said, compensation is not only cash, may have variable pay also. So in some cases, total cash compensation may be higher than the base pay, etc., etc. So this is this 50th percentile, 78th, 90th percentile, etc., etc. This is the report that you get, and now you have to decide how much you should pay. That's your company's wish. That's your company's philosophy, where you want to place yourself. You want A players, go up the ladder and give more salary. That's how it is. I'll just quickly go. This is, everybody knows what a uniform distribution is. This is a uniform distribution, and medium comes in the middle. That's how the uniform distribution works. You decide I'll pay somewhere around 65th percentile and find that range, and this is the salary I'm going to do. So this compensation benchmarking helps when you have a new role, when you are hiring somebody and you would like to know what is the salary I should pay as per the market trends. And this is how it is done. It's a long process, but this is a snapshot of it. And also, this is useful when you have annual appraisals in your office. You have done compensation benchmarking maybe 4 or 5 years ago. Now this industry trend has changed, and you have a compensation restructuring happens in the organization. And you do this, and you will understand, oh, this guy is really underpaid. We should actually give him more hike. And that kind of internal adjusting, parity adjusting, internal adjusting, industry averaging, those kind of things can internally be done using this compensation benchmarking. So this is another graph that I got from the PayScale website. This is the year-on-year change for this position, software engineer position. In 2015, they were given 4 lakh rupees for 3 years, and now they are given 4.5 lakhs. That's the average. So this is the pay level, experience, etc. So a lot of data that you get, and you can take an informed decision based on this. Last portion, I'll stop it in 3 slides. So total rewards, when we talk about total rewards, see, guys, as I said, compensation is just part of it. Payroll is a small portion, and the bigger envelope is the compensation. And compensation plus something is the total reward. Total rewards is a comprehensive rewards package. Compensation is just one of them. So you see, payroll is just an operational thing, encompasses by the compensation, and this compensation plus something else is the total rewards. So if you look at total compensation, there can be two: financial, which is known as extrinsic rewards. You might have come across this term in your MBA textbooks, and non-financial as well. And financials, there are two things: direct and indirect. And the direct one is what you get in hand: base pay, fixed pay, variable pay. For sales folks, it can be based on their target. So that's variable pay, commissions, etc. So there are the direct ones, and indirect ones are the benefits such as provident fund, gratuity, etc., which are mandatory. And there are some voluntary ones, which I said: the Flexi benefit plan, vacations, break, holiday, security planning, educational assistance, etc. So you can read about it if you're interested later. And if you look at the non-financial, that is intrinsic rewards, what they get is, when they get good compensation, what they get: satisfaction derived, and the praise and rewards. Everybody is recognized within the organization. They feel valued. They're actually valued, and that's kind of the thing, which is the end result. You know, money makes happy, but then it need not be the case for everybody. They might need to be valued in the organization, praised by their peers. So these kind of things are intrinsic values of compensation as well. You have heard about that best employee awards, etc. So these are known as R&R, rewards and recognition. That's an entirely different topic. I'm not jumping into it now. So let's and just keep this as well. Now let me tell you one cool reward that my company gives. It's something called, my company's name is Full Contact. So it gives, over and top of their CTC or their fixed salary, every year employees get something called paid vacation. What it is you take a vacation for 2 weeks, okay, go off grid, don't work at all, don't connect your work. You are not supposed to connect your work. No Slack, no messages, no emails, nothing. Okay, completely disconnect from work, go anywhere you want, take vacation for 2 weeks. You'll still be getting paid. Okay, on payroll you get the full salary, but then on top of it you'll get 1.5 lakh rupees every year. So this 1.5 lakh rupees will allow you to go travel, So this benefit is there because we are a young company in the sense that we have an average age of less than 25. People working in our company, people want to travel. So that's how we decide what is the compensation strategy that we should have, what is the benefit strategy we should have. There is one benefit that normally larger PSUs, those public sector undertaking companies are giving these days. I mean, it's an old one, uniform allowance. Okay, or let's take children tuition allowance. So children tuition allowance, if it is given to our company, it doesn't make sense because we don't have those many people who are parents, or we don't have anybody at all in the organization who have school going kids. So it doesn't make sense. So benefits differs from companies to companies. So that's what I came to when I started the session. I said automation can be there, but there are certain factors where human intervention is required. This is one area. You as an HR professional have to understand your workforce. You have to understand your company's goals and try to formulate benefits and total rewards so that you can connect your business goals as well as the personal goals of your employees together. That's where the just comes in. So I'm just trying to, when I took this slide from Deepa again, some cool benefits which are not necessarily be given by old age companies. Job switching, job sharing, work from home. Work from home is like a very valuable benefit for the millennials, including me. I belong to this category, but what I see very recently is people want to work remote than my generation who want to work remote. It's very widely accepted. I know people who have not joined organization because in allow WFH. So this is a very valuable asset to very valuable benefit to many of the employees. So and the organization actually doesn't lose anything if they are actually letting somebody work from home, uh, if they have taken sufficient measures. So it's a non-financial thing. They just allow somebody to work from home, but the loyalty or the engagement that you get is huge. And childcare subsidy, total hours worked per week, etc., etc. So holidays, number regulation. So some companies give more holidays, etc., etc. For example, like in our case, we provide more than what is legally required. So how we decide on benefits? We look at the employees, their age, their interest. They want to travel, they want to cook, maybe they want to dance. Okay, you decide the benefits based on that, so that they feel contented, they feel valued. Okay, and gender, location, everything matters. Everything matters. And look at your competitors' benefits. Take your top competitor in the market. What they're giving, we should give better than them. That's how it is. Okay, and we have to ultimately we have to connect this to the business goals as well. Giving benefits just for the sake of giving benefits is not the right way. You have to connect that to your business goals as well. That's where the HR as a business partner comes in, and devise a plan that works. Do not forget to look at the business needs. Thanks, gentlemen. This is what I wanted to convey. My thanks and acknowledgements to Sri Lal MR, who is the HR manager of Aptiv, and largely to Deepa Kauka as well, head of CNB, Amazon India. I attended her session a couple of days ago. And best of HR Forum. Thank you very much for giving me an opportunity to talk to you. This is my first webinar session. I'm sorry if I had hiccups. I prefer teaching. I prefer talking to people face to face. Unfortunately, because of the lockdown, I had to do it as a webinar. But give me feedback if there is something. I'm on LinkedIn. That's my link. Got a lot of A's and N's, and people get my spelling wrong. Anyway, it's Arun Anand together without space. Arun Anand, TA. If you search on LinkedIn, you will get to see my name. Yeah, that's all. Yes, I'm on time. I guess 6:30. Yes.
Yeah, thank you, Arun.
Yeah,
Like,
I'll
we can
open the questions.
yeah.
Sorry.
Title.
No
I think
questions?
no more questions. Yeah, I
Okay.
think so.
Okay, fine then.
Yeah.
Bye bye. Have a good evening and a happy Vishu to everyone.
Thank you, sir, for the detailed session. And thank you, Biju, sir, for adding into that. And thank you, all of you, and happy wish you also.
Thank you. Bye.